chapter 1, which is why to trade in the stock markets, what we are going to learn is how we approach the stock markets as trading other than investing. Usually people look at stock market as an investing play field, which is for long term. The purpose of investing is usually to build long-term wealth or a generational wealth. But short-term view is also something which we can look at stock markets for, and that is where trading comes into picture. When we are trading, we are not looking to build long-term wealth, but we are looking to generate a secondary or an alternative or a primary source of income from the price fluctuations of the market. So in trading, what we look at is the price fluctuations, which in market terms we call as volatility. That is when the prices go up and down, up and down, up and down, which is usually what creates panic amongst common people or people who do not understand the price movements. Welcome to Chapter 2, Identification of Trends and Analyzing Price Trends. So before we jump into what are financial and stock market trends, I want to ask you, what is trend according to you in general? We hear a lot of times that this is trending or this is in trend. What does that mean to you? If you're thinking about a fashion trend or a social media trend, you're absolutely on the right track. Trend is nothing but a direction, a general direction in which maximum people follow. So if a particular fashion is in trend or a particular social media, say an Instagram reel is trending, that means that is getting the most engagement, and that is where the traction or most of the people's attention or engagement is in. Similarly, a financial trend or a stock market or a stock price trend is nothing else than the general direction of that particular stock price. Welcome to Chapter 3, the basics of technical analysis. In this chapter, we are going to learn how to analyze the price and volume data and how we can pick up winning trades from losing ones. So starting with the price and volume data, we are going to use technical charts to analyze. So there are different types of charts which are available in the market. The simplest one being the line chart. What we see on a line chart is nothing else than prices of a particular time being jotted down. So if you can see on the graph, right now we have a daily time frame chart. So what happens here is every day's closing prices of a particular stock is mapped out. For example, today Reliance closed at 2,400. So that is today's closing, and if tomorrow's closing is 2,450, then you see the price moving 50 points up and the line also moving in the same direction. Welcome to Chapter 4, that is risk management. And this is going to be the most important chapter in your entire stock market learning journey. The reason I say this is out of personal experience. When I had learned technical analysis and the basics of stock market analysis, I had gone in very enthusiastically in the stock markets to trade with my trade strategies and all. And it just took me 3 months to lose 67% of my capital. And that's when I realized the importance of risk management. Even after doing 9 back-to-back profitable trades, it took that one big loss to wipe away not only the previous profits, but also pinch a big hole in my capital. And for us not to do that, we need to learn how to manage our risk and quantify our trades accordingly. So, to make it very simple, I'll give you an example of a casino.